All right, great. I am in Los Angeles, but it's a great place to start. You wouldn't know it, but our last panel was not about ESG. This is the dirty truth, supporting renewable energy and ESG. I'm Rayne Steinberg, the CEO and co-founder of Arca, and I just want to thank everybody for joining us today, especially our panelists. I'm going to let them do brief intros, but I have Meltem, Demirors, Chief Strategist at CoinShares, Nick Carter, partner at Castle Island Ventures, Sheila Warren, Head of Data at Blockchain and Digital Assets at the World Economic Forum, and Mustafa Yiham, VP of Global Business Development at Bixin. Meltem, why don't you start us off?
Yeah, I'm happy to, and thanks to Mustafa from Bixin for being here. I roped him into this conversation, and I was just saying he actually has a mining business in China, so like who better than Mustafa to give us the details of what's happening given the news this week. And then Sheila, I was just saying, has been hosting conversations on ESG for the last 4 hours in another discussion, so I'm glad she could be here as well. But I'm with CoinShares. The reason I'm on this panel, I spent 7 years in my career prior to Bitcoin in the energy industry, and I actually spent a lot of work on shale gas. Natural gas, if you recall, was supposed to save the planet. T-Boone did a great job getting the US to migrate a lot of its power generation from coal to natty or nat gas. Spent a lot of time in that industry, spent a lot of time in utilities, deregulation, the utility grid. I traded 24-hour power briefly, but I developed a coffee addiction and a heart palpitation. So I decided that trading power was not for me. It's really intense. And obviously, my firm, CoinShares, over the last 4 years, was one of the only firms in the space to really spend a lot of time attempting to start to demystify some of the fear, uncertainty, and doubt, or FUD, around Bitcoin's energy consumption. In 2017 and 2018, we published the first Bitcoin network reports that, for the first time, from a bottoms-up research analysis that took 6 months, where we called every miner, we were able to conclude that over 77% of Bitcoin mining was done with renewables. In 2019, our data confirmed that again, and that's been our involvement in the space. We also make a lot of investments in miners who are mining with purely renewables, and we can talk more about that on the panel.
Fantastic. Thanks, Meltem. Nick, why don't you tell us how you guys are looking at ESG at Castle Island?
Yeah, so I'm Nick Carter, GP at Castle Island, also a co-founder of CoinMetrics, crypto data business. I expect we'll talk about issues with the data at some point today. It's certainly an open question regarding, Bitcoin's energy mix and all that fun stuff. It's a very fun data challenge. We are not, strictly speaking, an ESG-focused firm, unless you consider Bitcoin to be an ESG asset, which I do, obviously, because people forget the S and the G, as they said on the last panel. Bitcoin gives you social scalability. It is an independent system of property rights that anybody globally can opt into. But we invest in crypto infrastructure businesses, haven't made mining a big focus, but I've certainly written a lot about it, benefited from the great work over at CoinShares, some of the content that Mustafa has produced as well, tried to synthesize the debate a little bit, but I can't claim to have worked in the natural gas industry or anything like that.
Thanks, Nick. Sheila, give us how you're looking at it at the World Economic Forum, please.
Yeah, thanks, Rayne. I think like with everything we do at the forum, we really see this as an ecosystem-wide play. And so, one of the things I'll just start by saying that drives me absolutely crazy is this idea that we can kind of effectively compare, this is the particular one that drives me nuts, Bitcoin mining and the energy use there to like the economy, like a country's energy use. This kinds of like apple zucchini comparison drives me nuts because it just doesn't it's not productive. It makes no sense. So we are fundamentally predicated on the idea that crypto is not going anywhere. It is an industry that is, just throw it, it's thriving and growing. We're at the beginning of a gigantic, we think, expansion of this entire ecosystem, this entire industry. Companies are going to be spawned. We don't even know what they're going to do yet. So it behooves us to really get this right. This is a known issue. We've been talking about this in the sector privately, for a long time now. And it's up to us, I think, as a community to come together and really think about what are we measuring? How are we going to make sure we're really making progress? And how is that progress going to be something that's meaningful to those outside of our industry, not just to us in our kind of little crypto bubble? So the forum is in the background. We're working on something we're calling the Crypto Impact and Sustainability Accelerator. And this is looking at, to points again, stolen, I'd say, by the previous panel, the E, the S, and the G. So how do we take some of these positive environmental, the change we want to see, and connect that into the social, and recognize that governance really underlies all of this. And the new governance models that we have with this technology, they are going to actually enable some really exciting and powerful things. And we shouldn't lose that in the narrative we're creating around this entire movement.
Thanks, Sheila. And now, Mustafa, please tell us from your very unique vantage point how you're looking at ESG investing.
Yeah, so thank you so much for inviting me to be on this panel. Bixin Group is one of the largest wallet provider and miner in China. And we started mining in 2009 and currently manage about 2.5% of the entire global Bitcoin network. And currently, majority of the mining operation we have is based in China and Central Asia. ESG have been a huge topic lately for both inside and outside of China. China have been very serious on reaching its carbon neutral target. And past few days, I'm sure everyone saw the news. It has been a very crazy experience. But I'm sure we'll talk about that more in the panel going forward.
Yeah, for sure. Thank you, everybody, for joining us. Yeah, let's start out broadly. I think this was very interesting leading in from the prior panel to see, how ESG narratives can be overtaken by whoever wants to. People can focus on whatever part of the ESG investing. When you think about why ESG investing has become such a dominant narrative in our space, what do you think is driving that? Let's start with Sheila, as you were just moderating that panel.
Yeah, I think it's important to contextualize. And so this is reflective, I think, of a broader movement by investors examining ESG in different industries. And so just the way that you're seeing accountability in automotive, and you're seeing accountability in manufacturing, you're seeing accountability in crypto. And so some of this is, I think, driven by what a lot of investors or even institutions are seeing as priority that's being indicated to them by their consumers or whoever it might be. So it's reflective of that too. It's not something that's kind of like just emerging. No one's picking on crypto, right? It's kind of happening in this broader context. The difference, I think, is that there isn't an assumption, and this is something I think we have to just be mindful of, that crypto is here to stay. That is, we take that very much for granted. Anyone who's paying attention takes that for granted, but not everyone takes that for granted. So there is this concept that we could just kind of eliminate crypto altogether, then we kind of solve this energy issue or crisis or whatever, and we go back to, I don't know what else, which isn't so great either. So that is something I think that does make this seem more acute, because there is this idea. I also think we have to be really careful about what I call kind of almost pre-regulation. So I worry a lot, actually, that there will be some regulatory policy that comes down where you port something that might make sense in one of those other industries. You kind of bring those metrics or that analysis over into this industry where it doesn't really make sense. And because we haven't, as an ecosystem, really come together and said, here's how we measure, here's how we show progress, here's how we demonstrate and make some actual meaningful comparisons, not these kind of unproductive comparisons, someone's going to come in and maybe do that for us. So, but that's the context in which I think this is all happening that needs to be considered as well.
Let's go to you, Meltem. When you think about the growth of ESG as a narrative, especially as it applies to our space, huge emphasis on the E. But what do you think about the other parts of that, like we just touched on earlier in our intros?
Yeah, absolutely. And again, I think, we all love talking about the E, the S and the G get ignored. Let's just talk about ESG as an investment theme. Investments asset management makes up 40% of our business at CoinShares. We have $4 billion in assets under management. At the end of last year, global ESG assets stood at close to 40 trillion. There obviously is a lot of attention on ESG. We operate in Europe. I'll share one interesting data point. What's really interesting is the conversation around Bitcoin's environmental footprint has reached a fever pitch in the media. We talk to institutions all day about allocating to Bitcoin. They ask about ESG, but not one of them has looked at the ESG considerations of a product. So when it comes to making allocation decisions, what's funny is people love talking about environmental impact, but allocators aren't necessarily so concerned. And I think there's been a lot of great research. Arca and Square did a really great research report. There are others in the industry who've done a lot of great work here. It just really isn't something allocators are that concerned about. There's just a lot of talk. So there's a lot of capital looking for places to allocate. What's been interesting to see, again, I think a lot of the concern, right? And it really is, the concern is almost at a fever pitch, and it's so, it feels so frantic, frankly, when in fact, you know, the Bitcoin mining industry and the Bitcoin network as a whole has been using renewables for a long time. Bitcoin mining is also a really great load balancer, frankly, for the energy grid. Like, for anyone who knows how an energy grid works, the energy grid produces energy to meet peak demand levels, but we only use that level of electricity or that level of power for about 2 hours a day. The rest of the time that power is idle. You can flip on or off Bitcoin miner in literally a second. So it's a great load balancer, which is really interesting. But on the S and the G, what's been really important and really interesting to observe, and again, shout out to the Human Rights Foundation and Alex Gladstein there, who's been doing great work, like highlighting the S and the G component and humanizing some of these stories. What we've always articulated is Bitcoin's energy consumption is a function of the network's security and is what enables the network to be decentralized in terms of its governance. Proof of work is absolutely foundational to what gives Bitcoin its security. The Bitcoin network has over $1 trillion worth of economic value in it. The Bitcoin network in the last year alone transacted over $1 trillion of value. That puts Bitcoin in the top echelon of global settlement networks and global monetary systems. So the fact that Bitcoin is consuming a lot of energy in order to do this is what actually makes it possible for the Bitcoin network to be a decentralized, permissionless, global, open store of value and monetary network. And so what's been really interesting to observe to me is, like, there are always trade-offs in life, right? You can't have something like Bitcoin. You can't have a monetary network with these security guarantees and this distributed governance and these social equity capabilities without having a consensus mechanism that provides those guarantees. So I think, again, you can't just look at energy consumption like this breathless, frantic, fever pitch manner. You have to look at the sum of the parts, and the story is just so much bigger here. And it really, like, I'm about to start a Hearts and Minds campaign because Nick's been doing a great job with the facts and he's so patient. I'm done. Like, I'm done talking to people about it because I've been doing this for 7 years and every year it's the same. We're going to start telling stories. We're going to start winning hearts and minds. I'm going to start publishing videos of people literally plugging Bitcoin miners into hydroelectric facilities in the middle of nowhere and creating jobs in economically disadvantaged communities. Like, this is not a bad thing. It's actually really profoundly incredible thing. And by the way, it's going to radically transform our energy grid and make it more resilient. So I'm all about it. I'm here for it. I'll stop talking there because I get fired up.
No, thanks. That's actually a really good segue, I think, to Nick's take on it. If you could talk about from the venture piece and not just like the buzz part of ESG, but really, you know, the impact of something like this for environmental, social, and governance issues, and how you guys look at it when you approach things, you know, as investors and investing. What do you think?
Yeah, I mean, we are a specialist venture fund. You know, we do one thing, which is invest in startups in the crypto space. The reason we do that is because not just to chase absolute return. I mean, if we wanted to do that, then we could have done any number of strategies. It's because we fundamentally believe in this notion of decentralized financial infrastructure as something that is truly empowering, as something that will enforce better monetary behavior from governments and do it in an incredibly high leverage way. And so, you know, that's the reason our fund exists. And that's the reason, you know, we do what we do. You know, about 5 years ago, I sat down and thought to myself, well, I want to work for Bitcoin. How do I do that? And this was eventually the way that I was able to instrumentalize that dream. And so, of course, we're not, you know, strictly considered ESG trademark. You know, in my view, ESG is a little nebulous and a little kind of commercialized at this point. And it's sort of unclear as to, you know, how genuinely beneficial we see these sort of ESG capital flows being. You know, you see ESG ETFs that have energy, hydrocarbon firms within the constituents of that ETF. So to me, it's a little buzzwordy, frankly. The other thing is you can't really argue, against the allocation of industries. I mean, for instance, there's plenty of mutual funds or ETFs that selectively exclude so-called sin stocks, things like that, tobacco, alcohol companies. All that does, the only net effect of that is it just drives up the expected return from allocators that are willing to allocate to those under-allocated stocks, right? If there's a stock of global capital that can't allocate to something for a global mandate reason, it just means that the remaining, plucky, brave investors that are willing to, get exposure to those sin stocks are going to look at owning a greater share of those discounted cash flows in the future. So, I do question, the merit of putting things within this explicit ESG wrapper. Of course, all that said, I do believe that capital is a way to express your views, on the world. That's what we're actively doing, but we're just not strictly doing it from within, that precise framing.
Yeah, I think we appreciate that, and a lot of people, that what people don't realize about this space is that a lot of the people approaching it, especially the ones that have been here for a long time, I think other panels have talked about that, the interesting thing about building in kind of the bearish down market cycles, you really learn a lot about the people that are trying to build things of substance, and that I don't want to say here for the right reasons, and not that people can't come in the very heady, optimistic times, but the people that have been here approaching this, in a 18-month downdraft on prices, and people constantly saying it's going away, there generally is something more than just appreciation and gain, and the little e, little s, little g components of that are a lot why we're all here, I would say. Mustafa, what I love about this panel is just this broad spectrum of opinions. Since we're talking about energy use, electricity, what variables do you guys look for when you're sourcing electricity at Bixin?
Yeah, so generally speaking, when we look at mining farms in China and around the globe, we look for three different variables mainly. It's price, voltage, and capacity. Price directly determines cost of mining. Voltage is oftentimes determines our cost of infrastructure investment. And then the capacity for miners like us, we generally look for sites that have 50 megawatt or higher capacity. Of course, other things come into play, such as government relation, stability of energy, internet connection. And recently, very importantly, renewable energy have also become a huge consideration for us.
Thank you. All right.
If I may, Rayne, if I may, I think Mustafa and I chat a lot. So, and we have a shared Turkish affinity. We're both Turkish, so we chat a lot about this. One of the interesting things that Mustafa raised that I think is underappreciated in this narrative as well is the capacity and the voltage component. Miners are actually making a huge investment whenever they co-locate with a renewable energy facility. I think people don't understand how electrons flow from generation to powering devices. Like, we live in this world where internet just floats in the ether through Wi-Fi, and power just magically appears from the plugs in our house. But understanding that whole value chain, right? The energy gets produced at a facility, but then it has to be transmitted via power lines. And there's transformers and a lot of really complex substation equipment that allows that energy that's generated to be utilized productively by different industries. Bitcoin miners that are co-locating aren't just investing in ASICs and the power offtake. They have to actually build a lot of transmission capacity and have to build inverters and substations and invest in all sorts of ancillary infrastructure that's really expensive. So when firms like Bixin, Mustafa's firm, are making allocation decisions, it's not just as simple as, hey, I'm going to set up a data center and plug in a bunch of stuff. They have to set up inverters and all sorts of very expensive infrastructure, which is why I think it's so important when we look at renewables. These are assets that are going to be on the grid for a long time, and duration matching is really important. So if I have a 20-year offtake contract, right, that's really long duration, that allows me to, from a CapEx and OpEx planning perspective, make those types of investments in infrastructure that's really expensive. Again, I emphasize that because I think it gets missed by people who talk about mining as though it's like some magical activity that that just happens when people show up with like a truckload of ASICs, like they just magically start mining away at Bitcoin. It's actually, it's a highly complex, like electrical engineering driven process. And so I think it's important to just contextualize that as well, because we're talking about real CapEx allocation, orders of magnitude anywhere from $100,000 for 1 megawatt facility up to millions for, you know, a larger 15 to 20 megawatt facility.
No, thanks, Meltem. Thanks for pointing that out, because I think that's also exemplifies a broader thing. You were talking about narratives here, all right? The narrative of, you know, green or not green or ESG or what it takes to do this and controlling that. And I like your idea of hearts and minds. Just when we think about that for investors who really are looking for real ESG, not just buzzwords, where should they look to get information that you guys like? Let's start with you, Sheila, and the forum. Where do you recommend investors go to get real information that would be helpful for them making these decisions?
Yeah, I mean, this is the question of the day, right? And I think we see a lot of high quality research out there. Unfortunately, there are some who will look at the sources of that research and say, oh, there must be lack of objectivity, there must be, you know, whatever it is. So part of the reason that we're launching this accelerator, this crypto impact signal accelerator, is in part to kind of provide that comfort, you know, to those who don't really know where to go, and to amplify some of the excellent quality research that's coming out there and say, this is something you can kind of look at. So I think there is, again, because we are often contextualizing research ourselves, you know, to make a certain case. Let's remember, I mean, this is not a monolith of a community. There are a lot of people that have different views, and they're trying to kind of, to some extent, there's wedge issues around ESG where you can kind of start to drive forward your own narrative, right? So stepping a little bit outside of that, connecting some of those pieces of work together to try to show a bit more of an objective overview of the landscape, something that we're trying to do. In terms of where you go, I mean, I think this is, again, it's just one of the big problems, is that no one really knows who to trust. And the people that I think there's a lot of people saying a lot of stuff, let's put it that way. And they're saying it in all kinds of different venues, and they're saying it with different character counts and different, you know, sound bites. And it isn't always nuanced enough. It isn't always accurate. And part of what we're trying to do is just help land a different message that will be more productive for everybody, not just those in the crypto space.
Got it, thanks. Nick, same idea, trusted sources on ESG, but not necessarily the buzz letters, but good info for people really wanting to understand how this does, you know, it's a very nuanced discussion where they can get not crazily high level, but, you know, accessible ways to access this and think about it.
Well, the good news is that in the crypto space today, there are some extremely high caliber sell side desks producing content, which is, you know, extremely reputable. CoinShares has been on the vanguard of this, really ahead of the curve in terms of high quality sell side research. Galaxy Digital, you know, a few good friends of mine working over there, produced a report on the sort of quote unquote China Bitcoin situation, I believe today. You know, there's good research coming out of NYDIG and Coinbase, and you know, most of the large brokers and financial institutions, frankly. One, you know, sentiment, one feeling I have looking at the mainstream media discourse on this is, you know, a tremendous amount of disappointment in terms of regurgitating certain academic narratives, academic papers, which are written by non-sector specialists, frankly, people that have a very limited understanding of how Bitcoin, for instance, works, how these protocols work. And it's clear to me that a lot of the mainstream journalists are, you know, extremely agenda driven on this topic and don't actually read the academic papers that they cite. Just because a paper is published by some, you know, reputable journal does not mean that it is being representative or it's making correct assumptions as to how Bitcoin operates, for instance. And there's a number of these papers that I could enumerate to you right now that get cited in the press and are, you know, have significant glaring flaws in them. I won't get into that level of precision, but you know, unfortunately, a lot of the outside in commentary is is pretty far off the mark. And so I would honestly trust industry sources. I know, as Sheila says, people might have questions about their sources being conflicted, but there's this odd paradox where the people that are specialists on this stuff tend to be in industry, because the reason they learned about it was because they cared about it. And so there's a bit of a paradox there, but as they say, no conflict, no interest.
And Meltem, before we get your Hearts and Minds campaign, and we can go there to get this, where would you suggest people go to get unbiased or, at least thoughtful, balanced information on this issue?
Yeah, and I think, as Nick alluded to, I actually do think people in the industry do an excellent job at being objective. Numerous times people within the industry have acknowledged the fact that there are critical gaps in data, that there is more that we can do here, that there are opportunities to materially improve, not just on the environmental reporting side, but also on the S and the G. So like, we as an industry, I think, are hypercritical of ourselves. And actually, I look at, I've been in this industry 7 years. I think everyone here on this chat has been in it for at least 4, if not longer. This industry has done a tremendous amount of work around this and on this topic for zero remuneration. Like, Nick's not getting paid for it. I'm not, like, none of us. I wish I could get paid for it. And I think we all do it because we ourselves wanted to know the truth, right? Like, we would get asked questions. I was like, I actually don't know. Like, let's fund a long-term research study to actually figure out how we answer this question, because we don't know. So I think, again, in terms of sources, one of the challenges has been there is no one portal you can go to. Bitcoin's decentralization is sometimes its biggest issue. Like, we don't have a foundation. We don't have a marketing budget. We don't have a marketing department. We don't have an IR department. The IR department of Bitcoin is millions of people on crypto Twitter every day, right? Like, doing their thing. There is no coordinated messaging. So that's why I'm really excited about the Crypto Climate Accord, which is something we've signed on to. It's just basically the equivalent of the Paris Accord. It's totally voluntary. Anyone can sign on to it. Us and a bunch of other firms have signed on to it. My goal by the end of this year is to get 25% of global hash rate signed on to it. And all we're doing is saying, if Bitcoin is a global digital community, right? It's effectively a digital nation state with its own citizens, right, who hold its money. Then let's align ourselves with the global economy and sign the Paris Accord. So we created our own equivalent. It's called the Crypto Climate Accord. That website is starting to aggregate some sources. I'm really excited about working with Sheila and the World Economic Forum, who I think have been a great aggregator of information. And I think, again, finding these kind of voluntary, impartial organizations we can start to aggregate this data will be great. Sadly, I do think a lot of it right now is people Googling and trying to find answers. And a lot of the top hits that pop up, unfortunately, quote sources like Digiconomist that are highly questionable and that's being generous with that commentary. So I do think, as an industry, I recognize the challenge of providing a central source of information in a decentralized fashion. So again, I would say, Crypto Climate Accord is a great starting point. And then WEF, I'm really excited to see what Sheila and team do. I don't know, Mustafa, if you have other thoughts, but it's a problem. Like, we don't have a marketing budget. We're dependent on volunteers doing the work.
Yeah, I just want to, before we move on, just say I think you highlight an excellent point that it's even more broad to our entire ecosystem. This is a decentralized experiment, and we come from a very centralized way of doing things. And it hits security and the way people interact with these protocols. So a lot of the technology and the way we use it can be there, but our philosophy, the way we approach life, we're very used to dealing with centralized structures, having centralized authorities give us data, permission, things like that, where this is completely the opposite of that. So what I really like taking away from this is do your research. If ESG is important to you, investigate it. There are disparate sources out there. It's easy to tell once you dig a little deep the people that are being thoughtful about it. You don't have to agree with them, but that aren't just trying to be the loudest or have the biggest celebrity footprint on these things. And if these things are actually important to you, just like if security or privacy is important to you. You probably have to take it into your own hands and do your own work.
The one thing I'll say, Rayne, is I think a lot of proof of stake protocols are now trying to take a tack of marketing themselves as better than proof of work because they have centralized foundations with millions, if not billions of dollars of the public's money. Look, proof of stake and proof of work are two fundamentally different value propositions. You don't choose what bank to bank with based on their energy footprint. You choose it based on the features that are important to you. So I think, again, we just really need to be very careful here. When people say I'm biased because CoinShares, makes money from Bitcoin products, so are proof of stake protocols who have millions of dollars of budgets and marketing dollars and lobbying that they're using to position themselves as ESG friendly protocols. Like, don't fall for that narrative. They have their own merits, and I'm not here to mock, those merits. But again, let's just remember the value proposition of Bitcoin is completely different. It's up to each investor, but I totally agree with you, Rayne. People need to, spend some time, but institutional allocators are doing this, which is why once they look at Bitcoin, they're like, ESG, not a problem. This is actually one of the best ESG assets we can own. I'll pause there.
Sheila, Meltem mentioned what you'd be doing at the forum about carbon neutrality.
There's a lot of different things we're doing. So we're actually starting to work with Crypto Climate Accord, and what we're really trying to do is connect the narrative of the E, the S, and the G. I mean, there's just a tremendous amount of work happening focused on the E because that's what's getting a lot of the bandwidth right now, a lot of the attention, a lot of the sort of craziness, around that. But, I'm a governance junkie like that. I don't apologize for that. It's like, and the nerdiest about it. But I just think that unless we're making the case of why the governance is so interesting, why it matters, what different governance models look like, how we're exploring this, people need to understand that, there were people, to be fair, at the time the internet arrived who were like, oh, this is the worst energy, criminal ever. And look at how much is wasted on this, whatever. But there was nothing like it before. There's no way to make an effective comparison. It was literally impossible to do that. And we have to get to a level of societal understanding where it's similar and cultural understanding. This is a similar thing. There really isn't anything you can compare this to. It's impossible, I would even argue, to bound the industry. How do you do that? How do you basically bound? Where's the end of this industry? Where's the end of the ecosystem and what sits outside it and what sits within it? You can make arbitrary distinctions, and all of us do it all the time, depending on who we're talking to, but they're arbitrary. And it's just important to kind of understand that. So to answer your question a little more directly, Rayne, from earlier, I would say, how do you tell, high quality research from non-high quality research? How nuanced is it? Anything that's coming in that's super black and white, you should immediately be very skeptical about. And I think that's probably true in life, but it's definitely true in this space. It's complicated. People need to lay out their assumptions. How are they contextualizing the work that they're doing? What are they specifically looking at? What are the goals of what they're trying to accomplish? How are they demonstrating, I think most importantly, future progress? How are any metrics we're creating demonstrating that we are making future progress towards the goals that I think we all feel, are critically important here?
Mustafa, please.
So Ryan, few things I want to add here. So number one is that I think it's very important for people to understand the source of where should they look for it, especially in finance case. I don't think it's that complicated as what people assume, because in China, what we do as miners is we migrate between the seasons. During October to May, we spend a lot of time in we call them winter season, and we spend a lot of time in Xinjiang, Inner Mongolia, and the pass, etc. But from May to October, we call it rainy season, and we spend mostly in Sichuan. And it's actually a known fact that Sichuan have excessive renewable energy that is almost close to 100% renewable. So at the minimum, Chinese miners are using 50% of the time we're using renewable energy. The other 50%, the Inner Mongolia banned its crypto Bitcoin mining earlier this year. But I think it's very important to put a note there that is in Inner Mongolia, not just Bitcoin mining was banned, cement production, steel production was all banned or put in reduction. This is just government taking very serious steps on this carbon neutral target. Since then, we have moved a lot of our mining machines to the Xinjiang region. Earlier this year, on March 31st, Xinjiang grid reached at the peak 50.5 1.03% renewable energy. And this is also a completely public information. But if you look at yearly average, it should still fluctuate between 30 to a bit over 40% on renewable on the entire Xinjiang grid. And so I think what Meltem said earlier, we also estimate around 70% or more of the entire Bitcoin mining should be currently in the renewable stage. Further, I just want to point out, Bitcoin miners are like on the SG issue. Bitcoin miners like us, we're completely Bitcoin denominated. And we take proud in that, proud of the fact that we are Bitcoin denominated, and that's because we really believe Bitcoin's social impact around the world, and we really want to make a contribution on that front too. We're actively, deploying resources on Bitcoin's development. We have spent tremendous time early on with Bitcoin community, even now, to see where we can help and advance Bitcoin's technical development.
Hey, Mustafa, you're breaking up really, really bad. I don't know if anyone else had heard you breaking up there, but I think the point Mustafa made last is the most important one, which is one, I think a lot of times people paint miners as like greedy people who just don't care about Bitcoin at all. And if they weren't mining Bitcoin, they'd like mine something else and they don't really care because they're 100% profit driven. I think that's actually like a narrative construct. Miners do care about Bitcoin. They're a critical part of the Bitcoin network. And if the Bitcoin network loses its integrity and its value, that negatively impacts Bitcoin miners because all of their profits are denominated in Bitcoin. And many of them you can track this via data on, coin metrics. Like a lot of miners still hold the Bitcoin that they mined over the last 5 or 6 years. So again, the incentive structure of Bitcoin means miners are aligned with the rest of the industry in finding solutions to this ESG narrative issue. We all want to make Bitcoin resilient, sustainable, decentralized, right? Decentralized, like in all aspects. And so I think that's where, again, Chinese miners a lot of times are vilified. I'll say what Mustafa probably doesn't want to say. I feel like a lot of times in the industry, people vilify Chinese miners. Yet what I think is ironic, people will tweet about how they don't want Bitcoin mined in China with dirty coal, yet they're tweeting it from an iPhone, which was produced in China using dirty coal energy to manufacture its key components. 30% of the world's goods are produced in China using non-renewable energy. But like somehow for your shoes, for your household goods, your laptop, your iPhone, your cup, like none of it matters. It's only when it comes to Bitcoin that we're suddenly really, really concerned about the fact that it's produced in China. Like it's a wild narrative. It's like a deeply problematic narrative. In my view, it's wild.
No, I agree with all of that. I think, portraying any of these groups as monolithic is dangerous anyway. There's, independent actors that have varying degrees of overlaps. There's Venn diagrams of alignment, and all of this is much more complicated. And a lot of this comes from applying these very central, views of the world that this is the way it is. This is what's interesting about this experiment is that it is, especially Bitcoin, that it is so decentralized, that it is not directed. And while that is sometimes frustrating, that you don't get to move it in a certain direction, which we're accustomed to, but that is part of its beauty and power, this organic evolutionary development, and that leads to its resilience and power. I think that's a good lead into, let's go to a little bit on the G, on the governance of this in ESG. What do you think about discussions of centralization and those type of dangers to the autonomous nature of the network or not being controlled? Let's hear from Nick on that and how you think about that.
Well, a lot of people have been concerned, of course, including yesterday with discussion that this new disclosure registry that Elon Musk is apparently involved in would somehow constitute a cartel, which I find to be preposterous. You can question the merit of disclosing your energy mix one way or the other, but ultimately, it's a group of miners representing something like 10% of hash power, and there's no attempted protocol changes being made. Simply the suggestion or coordinated view that miners should disclose their energy mix, which in my view, regardless of whatever structure you're undertaking, more disclosure is good because the facts on the ground are pretty good. Sorry, there's a bit of a siren outside.
Oh, wait, that's the energy police coming for Nick.
Because the facts are good, I think we should be disclosing as much as possible, miners in particular. You know, I don't think, you know, I've never been one to try and sort of like hide any uncomfortable facts, whatever they are. We should be doing our best to expose them. You know, sunlight is clearly the best disinfectant. You know, the potential move out of China also helps abate, you know, some of these concerns around centralization. So to me, the centralization picture in Bitcoin mining is getting dramatically better by the month. You know, and the existence of some of these interest groups, you know, determined to whether it's, you know, the Crypto Climate Accord or this new council, those are just bottom up, self-organizing, self-regulatory organizations. So I see no issue with that.
Sheila, as a governance junkie,
Yeah.
please tell me how you view this.
Well, yeah, let me also address this with full, you know, awareness of the fact that my own organization, my own employer, you know, is viewed by some as kind of like a meet in the snow and create, you know, whatever crazy policy that influences everybody or whatever. I agree with Nick completely. I mean, I didn't see this as the scary thing that I think some people are trying to kind of position it as. And I think that we're going to see a variety of such efforts, and they're all attempts, I think, by different parts of the industry to behave in what they're perceiving as a responsible manner and to kind of say, here are the things we've been doing individually and we've been talking about them privately, and now we're just kind of doing that more openly. And I don't see anything particularly wrong with that. But again, I want to own the source, right? And I know that I sometimes speak for the institution on that kind of thing. As a general matter, I think I'll land again, like what we're trying to do at the forum is show that there is actually, it's important to have a variety of these kinds of efforts. And it's important to kind of think through how these things can be connected and to look across them and say, like, are there things that are standard? Are there groups that aren't necessarily motivated to talk to each other? It might be very hard to do so, or kind of creating almost that environment is very challenging for whatever reason it might be, right? It might be geographic, it might be incentive zone aligned, it might be competition, whatever it is. But there are going to be things that are consistent across these different kinds of initiatives that are going to, again, I think we're going to see more of these. And so part of what we're trying to do is almost go one level up and say, look at how the community is actually responding to these concerns. Look at what they've been doing this entire time. Look at the kinds of data we're actually able to pull when we kind of pull resources. Look at the commitments that people are making publicly, and look at the accountability, and this is kind of the critical part, that we can bake into that, whether it's through formally, in a way, through governance, or whether it's more indirectly through their kind of self-reporting and things like this. But there are different mechanisms, and these are, again, some of these aren't new. And the ones that are new, again, because of the governance models that can underlie them. So
thanks. No, perfect.
Yeah.
Mustafa, and as you view as a miner on this issue, how do you think about that?
Yeah, so as we all know, recently, last Friday, there was a crackdown on Bitcoin mining and trading in China. This is the first time, I mean, similar situation have happened in the past where government issued a crackdown on the mining industry, but this is the first time such a high level of government official saying that. So usually when it's this level of announcement, there will be some enforcement action in the following weeks. So miners in the past 4 days in China have been doing few things. Number one, a lot of them have been accelerating going abroad. This could include Central Asia, Russia, Northern Europe, and also North America. The second thing is some miners have also sold some Bitcoin. The reason why is the restriction not just goes on mining, but also on the trading side, right? So far, we don't know for certain when they say crackdown on trading, do they mean RMB OTC channel restriction or the derivative trading? So far, the exchange have taken the latter approach, where they have restricted new China mainland users to registering for leverage trading. But also there is a possibility on the RMB OTC side. As we all know, if we work in China, at the end of the day, as a miner, we need to pay for operational costs in RMB, such as paying for electricity, hosting, and the labor cost. So this have caused some panic within the miners and caused some market sell-off. But I think it's very important to remember the similar level of ban on crackdown on trading have happened in 2017 in September. Briefly, it affected the Bitcoin price, but at the end, what really happened from that event was that very large chunks of Bitcoin was moved out of from China-based crypto exchange to Western crypto exchanges. To today, if you look at Coinbase custody and other US institutions, it has significantly higher influence to Bitcoin than China-based crypto exchanges. So I think this mining crackdown is going to have exact same effect. At the end, the largest impact this is going to have is China is going to have less power on global hash rate distribution, and hopefully Bitcoin will get more decentralized after this.
Fantastic. All right, Mustafa, thank you. That was, I think, a great way to end that. Even showing that people that supposedly are harmed by this activity are pro the decentralization of this, or see the benefits of that as well. And I just think that that's a great place to stop our conversation here. And I want to thank our panelists so much for this diversity of opinion here, and like on what is just become such a meme issue. And it's hilarious that, to me, that in a space, digital assets, Bitcoin, things like this, that have literally, there's probably not something that touches on the ideas of environmental, social, and governance in one thing. And you could feel one way about it, whether it's positive or negative, but to say that it is not something that legitimately approaches it, when the number, I think, was $40 trillion of assets are in big E, big S, big G investments. And very interestingly, when we talk about regulation, our own regulatory bodies, the SEC, has just recently given guidance to people making ESG investing claims. You better actually start to think about what that means. And we at Arca, and I'm sure the people on this panel, support that clarification too. So this, I think, has been an incredibly helpful and thought-provoking conversation today, guys. Thank you so much for joining us. I'm going to kick it over to our main panel now. Thanks again.
Thank you. Thank you.
All right, I've also been told I am the main panel, and I will be wrapping up. I just wanted to say thanks to everybody that joined us today, all the panelists, all the speakers. As somebody that's been at Arca, obviously, since the beginning, this is an incredibly just gratifying experience to see so many thoughtful people come to a conference like this and share their opinions and their time so generously, and have such interest from the audience and the participants on questions. It really is fantastic. So thank you, everybody. If you did not get to see anything, don't worry, there'll be recordings sent out to you. And if you ever need any more information from either panelists or us, please don't hesitate to reach out. Thanks again, and have a great day.